In 2008, the world was hit by one of the worst financial crises in history. It all began with the collapse of the housing market in the United States, as subprime mortgages, which were given to borrowers with poor credit, defaulted at an alarming rate. This caused a ripple effect throughout the global economy, as major banks and financial institutions, who had invested heavily in these mortgages, began to fail. As the crisis deepened, it became clear that the problem was not limited to just the United States. Countries all over the world were affected as the crisis spread through interconnected financial markets. The crisis led to a sharp increase in unemployment, as well as a significant decrease in economic growth. Governments and central banks intervened with massive stimulus packages to try and stabilize the economy, but the recovery was slow and painful. The 2008 financial crisis was a stark reminder of the fragility of the global economy and the need for better regulation and oversight of financial markets. It's important to remember that the impact of the 2008 financial crisis is still being felt today, and it serves as a lesson for future financial stability. The 2008 financial crisis was not just a crisis of the housing market, it was a crisis of the entire financial system. Banks, insurance companies and other financial institutions, who were highly leveraged, had invested in securities backed by subprime mortgages and other risky assets. When these assets lost value, the institutions became insolvent and had to be bailed out by the government. The crisis also led to a severe shortage of credit, as banks and other financial institutions were reluctant to lend money. This made it harder for businesses and consumers to access the capital they needed to invest and spend. The crisis also had a significant impact on the global economy. As trade and financial flows came to a halt, countries all over the world were affected by the slowdown in economic activity. Some countries, such as Greece, were hit particularly hard and had to undertake severe austerity measures to stabilize their economies. It's important to note that the 2008 financial crisis also highlighted the need for better regulation and oversight of the financial system. Since then, governments and central banks have taken steps to strengthen the financial system and make it more resilient to future crises. In conclusion, the 2008 financial crisis was one of the most severe financial crises in history, and it had a significant impact on the global economy. It serves as a reminder that the financial system is not immune to crises, and that we must always be vigilant and prepared to respond to them.